Welcome into how President Biden could impact your retirement. So, 1 year recap and update into the economy and the markets under President Biden. It's going to be presented by us here at America's Retirement Headquarters. So, if you have a moment, if you'd like to read through our disclosures and contact information, feel free to pause the video and you can take a look at all of our contact information and all the disclosures on today's presentation. Next of all, let's talk about don't wait and wonder, get educated and take action. And Bill, we were talking a little bit about this before, and this is Bill Hurley. He runs our Ann Arbor office with Victoria and Dan, but we were talking a little bit about not waiting and taking action, kind of the concept of coming home and looking at a leak in your kitchen sink.
Yeah, does it get any better?
It really doesn't. So imagine coming home, you see a leak in your kitchen sink, you just close the cabinets and walk away.
And
Unfortunately, it doesn't get any better.
No.
And that's really what today's quick couple of minute tips and ideas are going to share with you to give you some ideas on why not to wait and wonder, why today is the good day to get educated and take action. So what you're going to consider in the 4 segments, and all 4 of these segments are available on our YouTube channel. You can see at the bottom, we've got a link directly to our YouTube channel. But if you do go over to YouTube, just type in America's Retirement Headquarters. Not only can you see this video, but all the other segments that we have. A total of 4 that we're going to be covering 1 year into Biden. And I also encourage you to subscribe and check out our video playlist on all the other topics that we talk about. Those 4 topics are policy changes and potential taxes. We're going to talk about economic risk and opportunity. We'll cover government obligations, and then we'll finally wrap up the 4th segment on skyrocketing inflation. But for today's topic, we're going to talk about policy changes and potential higher taxes. Bill, do you think what our politicians say and what reality is oftentimes true?
History would tell us no.
Yeah, I think about this, and this is something that's not new with this administration. In fact, I can probably think of a couple of times in the past what they said on the campaign trail, or even what they say coming out of Washington isn't really what happens in the real world.
Right. The famous Bush quote, read my lips, no new taxes.
Yeah, and, we know how that all turned out. And, I took a screenshot here of the current president's Facebook post, and he talked about, the fact of the matter is my Build Back Better plan agenda costs $0, and it won't raise taxes on anyone making under $400,000 a year. You just have to really wonder, is that going to be reality? So a key point to ponder here is to take into consideration, have you determined and ran an end-of-the-year tax analysis, specifically looking at the case of what is called a Roth IRA and determining whether that could be a good strategy or not to take a look at. If we look at it, Bill, we're 1 year into this. And 1 year into this, let's talk a little bit about some of the policy changes that have actually been implemented and kind of what the results have been. So on the first day, the president, what he did is he made an effort to revert former President Trump's energy policy. What he did is he restored the U.S. in participation in the Paris Agreement. He also revoked the permit for the Keystone XL pipeline. I'd assume everybody watching in today's show has kind of seen a little bit of what the impact of the results have been of that.
Yeah, on the way down here today, I asked Victoria to remind me to fill up while I was in Ohio, because our gas is about $3.50 a gallon right now.
Yeah, so you've got skyrocketing energy prices, and they've continued to go up. Then what you had there from phase 1 was in March 21st. And what happened in March of this year was President Biden signed a major bill. It's called the American Rescue Plan. That was a $1.9 trillion spending bill. Then what you had from there is you had phase 2, and this is part of the American Jobs Plan. The Biden administration looked to try to implement massive infrastructure spending, which is another $2 trillion bill. On November 5th, so just recently, the House passed a $1.75 trillion package. And I guess short term, we can see what the results have been in the stock market. It's driven the market to record highs, but you've got to be wondering,
How are we going to pay for all of this?
what's the long-term impact of this?
And they got to vote on the debt ceiling in December, so
Yeah, and then it doesn't end there because phase 3 is on April 28th. During Biden's speech to Congress, what he did is unveiled his American Families Plan, which is a roughly $1.8 trillion proposal to significantly increase federal spending for areas such as childcare, paid leave, pre-kindergarten, community college, healthcare. It's considered to be his third phase of the Build Back Better agenda, again, covering the first two that we just went over. So you have to think about it with the recent massive spending. Will your family's tax rates stay the same or go down in the future?
or go up.
Right. And if you're worried that they might go up, a key takeaway from today's presentation is to run a tax analysis. I'd also encourage you, if you get an opportunity, to go on YouTube and type in the video on $1 trillion visualized. It does a really good job kind of walking through how big $1 trillion is. Sometimes the numbers, they get so big that ultimately what we do is we just turn them off at a certain point because it becomes so difficult to really understand how big that number has become.
It is a pretty fascinating video.
And if we look at it, I guess here's where we're at today. And if we look at where we're at today, you've got the national debt is at $28.9 trillion. And, one of the things that does is that creates a national debt for every single American. Now, every single citizen of the United States. So I'm not just talking about taxpayers, because
Everybody.
not all people who are of age pay taxes. Not everybody is of age to pay taxes. But every man, woman, and child, according to this screen, what we would see is that, we're nearly $89,000 per taxpayer. And so I love the movie Back to the Future. So if we go back in time and we take a look at it and look at where we were in the year 2000, the tax bill at that point was just, under $20,000 per person.
Yeah, like we were talking, my daughter was born in 97, so as of 2000, she owed 53, almost 54,000. Now she owes just a little under 250. Like I said, I still haven't told her that.
Yes, the
But
tax
that's-
bill is going up.
In her lifetime, it's gone up.
So,
four times.
at what point does it just become unsubstantiable, and what point does it really mean that tax rates are going to be higher? And I really would say, well, let's use history as a guideline, because what we can do is we can look at a history of tax brackets. In fact, if you look at this chart, you can see what the federal tax rates have been dating back from 1913 to the year 2019. And so, yes, have tax rates historically been higher for higher income earners? As this chart shows, absolutely. But what you'd also notice is even lower income earners, tax rates have been substantially higher for folks in the past.
And the scary thing is we're at historic highs for debt and historic lows for income tax. So
Really, it's something to take a look at. And, as the current administration really continues to make changes, Biden wants to restore the reshape of employer-sponsored retirement plans. So essentially what they're trying to do is they say they want to equalize the tax benefits of those contributing, to retirement plans, so higher income earners really are not getting more of a benefit than lower income earners. In doing so, kind of creating a standard across the board. And so for those of you watching today, this is a legislative alert. If you look at it, the government is trying to kill the tax planning strategy, and they're making changes for people's ability to look at converting money from traditional retirement savings vehicles to what we would consider to be potentially tax-free savings vehicles in the future. So this could be an area that delaying taxes may not be in your family's best interest.
that window's closing quickly.
Yes. So if you're going to do some tax planning and look at doing any conversions, the deadline for this is December 31st of this year to take a look at it. And when I think about it, I think about like a business owner and think about being a business owner when it comes to looking at your retirement accounts. If you owned a successful business and then you owed a certain amount of money to a partner, if you felt that that business was going to be more successful in the future and worth more money, but you didn't know how much your partner was going to ask as their fair share in the future, how fast would you want to pay off that silent business partner?
Yesterday.
Yeah, as fast as possible. And it's interesting to find that retirement accounts are usually one of the vehicles that it works that way. They're going to have to pay taxes at some point in the future. At some point, they're going to decide what the fair share is, but you know where it's at right now. So again, delaying taxes may not be your family's best interest. So what I would say is don't wait and ponder, get educated and take action. Again, if you're going to look at some of these strategies, December 31st is the deadline. One of the steps that you can take is complete a tax analysis before year end. Of course, anytime you make important tax or financial decisions, I'd always encourage you to consult with your accountant or tax professional. And some of the tools that we can help with is our Tax Saver end of the year checklist, as well as a 2021 tax roadmap. And Bill, on the screen here, I have a visual of somebody that we had recently met with. And what I did is I circled in green where this particular person fell on the tax roadmap. And so the difference between where they fell at and that next gray area, to me, showed a really good planning opportunity that they might want to consider shifting some money and paying taxes while they know what the rate is this year into an account that gives them the ability where it could potentially grow tax-free. So again, for anybody who's listening today, on topic number 1 year later, we've amassed massive amounts of debt, and the tax rates are going to be changing. Don't believe what the politicians say. Look at your own individual situation and take control of some ways that you could potentially lower taxes. So let's talk. Schedule a time for a free strategy session. And on the screen here, you've got both our office number here in Ohio and also our Michigan office, as well as our contact information. But Bill, I appreciate you coming and taking a couple of minutes just to talk about 1 year into the new administration and strategy number 1. Stay tuned or go to our YouTube channel. You'll learn more as we continue talking about the strategies and the 4 opportunities to take advantage of this year, 1 year into the Biden administration. Thanks for joining us. I'm Nolan Baker with America's Retirement Headquarters.